Alright, good evening guys. Today is August the 15th. It's about 9 o'clock Pacific Standard Time. I'm just going to do an update on 2 to 3 markets, starting with the Euro dollar. I'm going to look at the dollar CAD and possibly one more if I get time. So I'm going to start off with the weekly. I'm going to start off on a larger time frame on the Euro dollar first, and then I'll just make my way down to about a 120-minute chart. Um, so let me find the weekly just to kind of give an update on where we are and what's most likely to happen. So basically over the course of the past couple of years, the dollar has been very strong against the euro. Um, you can kind of count this. I have this counted as a 3. So this is an impulse wave down to where the 3 ended. I don't have anything labeled here, but if you just follow the tracer, I have a smaller A, a B, a C for a larger A, then a, then a B, a C for a B, and then a B, a C for a C of W, which is a double zigzag. So this entire wave here is the W, where it's a double zigzag for A double zigzag for a B, and a double zigzag for a C of W. And then I have another three-way move down from the top of my cursor to here. That's 1, 2, 3. That's A. Then I have A, B, C for A of B basically, and then a B. Actually, I have a. Let me start over. So this is a W. I have A, then A, B, C for B, and then I have A here. 1, 2, 3. B here. C. So this entire move is an A, B, C. That's a double zigzag as well for X. Let me try to squeeze it a little bit. This is my X here, and now you can count 1, 2 here, then you got 1, 2, 3, 4. You can have this as an extended wave 3, but this can do one or two things. So this is where I want to stop you, or actually want to point out some things and go into a little bit of greater detail. This could be wave 5. This could be the end of it, which is why I went short here at 118.38. Once price failed to go above 19.20, then I waited a little bit and then I got in. As you can see, I'm up roughly 100 ticks, but I have raised my stop significantly because for whatever reason, based on my labeling, I am anticipating another high to approximately 120, anywhere between 120 and 120.50, somewhere around that range. That doesn't mean that's going to happen, because this can very well be the end of Y. And if that's the case, you will have a W, X, Y. So then if you know Elliott, W's equals Y. So let's see Y. So no, my F9 is not working, but basically I would come here. That's a W. I'll measure that all the way down to X. And as you can see, it went well above the 100%. And if you kind of measure it now, I think it went 23.6. I think is where it currently failed. And we'll just do that measuring real quick just to see if that's exactly on the Fibonacci level where it kind of ended. I believe that's where it prices found resistance, 23.6. So let's do that. Let's do it to the right. Let's do it there. And as you can see, 123.6 here is 1858. It ended at 1907 or ish, somewhere around there, 1916, somewhere over there. So it went just above the 23.6, but nowhere near the 382. So this particular zone here is still a good enough trade once it failed to go short, which is why I did. I just waited. However, that doesn't mean that it is over. And as we look to a smaller time frame, we can kind of see what I am looking at. So let's go to a daily. And if we go to a daily, you can see here, if you started here, this would be the X. This can be 1, 2, 3, 4, 5, 1. This can be an A, this can be B, this can be C for 2. Then you can have 1, 2, you see the gap up, 3, A, B, C, 4. And then you can do, this can be either 1, 2, 3, 4, and then an extended fifth wave, 1, 2, 3, 4, 5 of 3. Or this can be 1, 2, 1, 2, 3, 4, 5, 3 here, 4, 1, 2, 3, 4, and 5, and this can be the end. But this particular bunch here it doesn't have the right look. And what I mean by that, if this was the end here, I would want to be looking for something like this to go down, similar to how this particular um, ended here. And as it just went down, that lets me know, or gives me a better indication that it's likely that the move up is over. When it does this here, and it's really just like shrinking in, and it's not really, it's failing. And as you can see, this can easily be labeled as a triangle. This can be a B, this can be a C. Not we'll come down to a smaller time frame so you can kind of see that. And then you'll probably have a D here, then an E, and then another wave up, to 120. It can likely be that way. And if you kind of look here, let's see, you can see that the support, this particular 1703 was a support. The current low found its support just above it. So price would need to impulsively penetrate the 1706 area for this particular top to be any significance of continuing this particular trend. And if I go over to my, let's see, my 120, I haven't done any of these actually. So if this was the 5, but see, here's the thing about on a lower time frame. If you have this top here as wave 5, where I see I can count 5 waves down. However, this still can be a A, a B, a C, because it ended right there, as you can see. So hypothetically, let's just say this is a 5. So now you have a 1, a 2, a 2 here, a 1, 2, 3, 4, 5, 3, A, B, C here for 4, 1, 2, 3, then here's a triangle, C, D, E, 4, 5. So let's just say that this was a 1. And that could be 1 of something if Y of 2 or Y of something ended here. So now you have a 1, a 5-wave move down, 1, but it's not, this move down is not impulsively. As you can see, it's up, down, 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 up. When I see this, that's not telling me, even though this drop here is impulsively, and it can be something, it looks like a corrective drop, so like a C or A or some form of that nature, not a 1 or a 3 or a 5. So you could say that this is a 1, this can be an A, this can be a B, this is 1, 2, 3, 4, 5, C of 2. So if you did that, let's say that this is 2, then now you're looking at a leading, well, it can kind of be counted as a leading diagonal 1 here. So if this was the 1, 2 count, now you have 1 of 3, then you'll see 2 of 3 kind of find some resistance right here around 1800. If it was to go back up from current levels, it will go to around 1800, and it'll find its resistance in this area, which is close to probably, this is probably has to be around 0.618 here. So let's do that and see where it is. Boom. So it's just above 0.618, but it's below 78.6. So I'll change the 76.4 to 78.6. 78.6, and take all the rest of the stuff off so that you can see it clear. And let me move it to the right again. So as you can see, if this was a possible count, you will have a 1, a 2, you'll have a 1 of 3, then you should see a 2 of 3, which would find resistance in this area between 1786 and 1813, to where if this was the case, then you would go short. Now, that means, I mean, it could be a good trade. If I was to do this, obviously your stop would have to be right here. So if you got in at let's say 1810 and your stop was at 1850, okay, big deal. If you took a loss and it does go up, big deal. You lost 40 ticks, no big deal, because the downside to this is a lot greater. So let's just say here, give or take, on an extension, if wave 1, if wave 3 equals 1.618 of wave 1, so then you have, if you have 1 here, and then you have 2 here, at bare minimum, it needs to travel to 16. That's at 100%. Now, wave 3 rarely travels 1.618, but that is, it's a guideline, it's not a rule. But let's just say that the market is a bearish, then this is where you would look to start taking some profits out. Now, it will basically go from current levels of 17-ish down to 14. That's a damn good trade. Even if you were to get in at in the high 17s, being that this market is still going up, if your stop was above the 2, which basically if it went above the 2, then this entire count, this is not a 1. So if it went above the 2, then technically this is not a 1 and it's in the corrective stage. So if your stop was here, and let's just say you got in at 1780, somewhere around there. Well, 1780 and you going down to 14, 80-ish, that's 300 ticks. That's bare, that's 300 ticks right there. With a 40 tick stop, that's the risk versus the reward is the reward is very high, and it's a trade that's worth it. However, if you look at it in a different way, for a bullish standpoint, just giving you the different options, well, you have this as a 3, so you change this, and you're basically saying that the top is not in place. So you have this as a 3, 1, 2, this is an A, B, C for A. So you have a 3-way move for A. So you have this as an A. You have this as a B, where your 2 is at. You have this as a C. You have this move up here, which will be a D, which will probably go from here to probably around here. And then you're going to have an E, which will come down to back about here. And then when it does that, once it does that here, you have the wave 4, and then you have wave 5. That will go above 120, well above 120, about 120.50 or so. So that's my projections on the euro dollar of what's likely to happen. So either way, I'm up, a significant amount of ticks, which is fine with me. However, I just have to show you the bullish and the bearish opportunities. From looking at everything else, it appears that the dollar was strong for about, or had gotten strong for about a week, and I believe, in my opinion, and just as an opinion, it's probably going to temporarily get a little bit weaker again, because it got strong over the past 7 days or so. And so if we went to, let's go here, this is just giving you, this is still the euro dollar on a 120-minute chart. But now let's go to an indicator that I like, which is the Ichimoku clouds. What is it telling me? So if you look at the Ichimoku clouds, from what I'm seeing, it's basically saying that price, if price goes through these clouds, it's going to continue higher. If it finds resistance here, then right here it's already warning me that prices should still continue lower. That doesn't mean that these clouds are 100% accurate, but if you know how to read the clouds, then you'll understand, and get a better indication on what to do. So with that being said, on this, what I'll be looking for is this particular moving average here to penetrate through here. Once this blue line penetrates through this red cloud, then price as well should penetrate through this blue cloud, or this purple cloud. And the purple is more for bullish. Basically, the red is for bearish. I just need to change this color. But in the event, then price will penetrate through, price will go above 118, price will go above 119, and basically the bearish alternative will be invalidated, and this will still be making one more high above 119, more towards 120, which will go above this particular high over here. If you look at it on another way that I'm looking at it, which is the point and figure, so let me show you that. You can see here, and if you don't know how to read these, I don't expect you to. It does take some time, but basically these trend lines, in order for it to continue short, it needs to break through this, and then once it's going to find some support in here, it needs to break through, and it needs to basically break through here. Eventually, as you can see, breaking through here is 200 or 300 ticks, but just to give it a start, it would need to break through this trend channel here. But everything is giving me an indication here on this percentages that 120 is where it's likely to go. 1.62%, 119, 2.72%, 121. As you can see, that the most recent was 2.13%, one going to 120, and then you have minus 1.87% going down to 115, and that's the most recent. So I mean, again, these are not 100% accurate, no indicator is, but once you learn how to read these things, it does give you really great advice on what to do in certain trades. I think this is a 240-minute as well, and if you look at this, this is also telling me that prices on the 4-hour chart, basically, that over the next several weeks it appears to be bearish. So this is telling me that even if price does go up, it's going to find some resistance here in this area, which will basically be wave 2, will be the end of wave 2, and then you'll see a move down. So this is what the Ichimoku cloud is telling me. So on a primary count, I'll stick with the primary as being bearish, and this particular wave here was 1, this is 2, this is 1 of 3, then you'll see 2 of 3 to go here, which is roughly about between 0.618 and 78.6. It should find resistance in here in that 118 level that we talked about, and then you should see the move down. That's my primary. The alternate count will be a bullish, and this is basically a triangle where this is A, this is a B, this is a C. You'll see a D here, and then you'll see an E somewhere around in this area, and then you'll see one more wave up. So it's something to keep an eye out on, and I'm probably not going to go into a different market at this time, just because I did spend quite a bit of time on this one, but I do want to go to a daily with the Ichimoku cloud just to kind of give a better indication of what we can see. So yeah, on a daily, as you can see, the moving average, it is pointing down, which is a sign. I would need this to start to break through. It already broke through this particular moving average line, so there is good indication that prices will continue lower. As this continues to go up, this will be a support level here, and you know, we'll see kind of what happens there. And if you look at this on a point figure, it's a little too large to do, but I can do it. You can see that prices um, are below this particular trend line on a daily time frame. So going up, it needs to break this particular trend line, and if it breaks this trend line, then it's going to tell me something. That doesn't mean that it will need to break it with a few more X's, these blue X's here. It just can't do one, and then it continues up. It needs a couple. But I mean, if you guys are interested in learning this particular method, you have to go to UpData, UpData, I think .com, or just type in Google, or you can do YouTube UpData LTD, and they can give you some good tutorials on this. So I'll leave this, leave that here. This is what we're working on, and tomorrow I will post. I'll talk about this market here. This is a good market, as you can see, 271 pips. I have the 5-way move up here. I have the A or the 1. I have the W, the X, the Y for B or 2. And then what I did is I went long, basically a counter trend trade, once it failed at the 0.618. So my stop, actually, I'm going to move that way up to the 0.5 because it's more than likely it's going to come. It may go to 129 and then find some resistance there, but I've already locked in at least 200 ticks, so I'm good on that note. We'll talk about this and see if we can come up with any alternatives in this market tomorrow. Until then, I hope this helped with the euro dollar. Take care.